As the market pops up on 20th June 2022, many central banks, led by the US Fed Reserve, made a weak attempt to term inflation as transitory. But very soon they realized that this monster is eroding wealth in a sustaining manner. Therefore, the US Fed has been a bit bold enough to raise in one shot the Fed rate by 75 basis points, the first time in the last 3 decades. Another surprising move has been from the Swiss National Bank, which raised their policy rate by 50 basis points for the first time in the last 15 years. Amidst all this, the Bank of Japan still considers it to cover or stick to the garb of transitory inflation. And they seem to have already paid a heavy price for continuing with the loose money policy that they have followed, as the USD JPY pair has risen considerably to 135. The Japanese government bond yields, which were in negative territory for long, has now come up to 0.25%. Another asset class, if we may say so, are the digital tokens led by the likes of Bitcoin, which are geography agnostic, having shed considerable value. A 70% erosion in value for Bitcoin from the high of $69,000 to the current low of $20,289 is very much alarming. Yet, people harbor hopes about booking a Tesla vehicle with Bitcoin. The benchmark US 10-year Treasury yield rose to 3.20%, and NASDAQ 100 closed lower at 11,265. The dollar index has lost some of its strength, but still remains above the 100 mark at 104. Gold settled steadily, I would say, at $1,840 to an ounce, while Brent eased marginally to $112 per barrel. Indian rupee closed at 78.05 against the dollar. With FII pullout for the half month cumulatively already touching 35,000 crores, the depreciating bias for the rupee is likely to continue in the week ahead. Nifty also was lower at 15,293, and any uptick from these levels is likely to see fresh selling. Therefore, long-term investors, it may do good to stay liquid. The benchmark Indian 10-year bond, 7.55% GOI, 6.54% GOI 2032, closed at a YTM of 7.55%. The new 5-year bond, which was auctioned on Friday, saw a coupon cutoff at 7.38%, but closed at a premium in the secondary market at 7.33%. Stay liquid, be agile. Have an interesting week ahead.